Hey, how we doing? Good morning. This is Chase at EVERBULLISH here, also known as the Stock Sherpa. I hope everybody's well. This is the trading post for Wednesday. Today's March 31st. I don't know why I had a hard time getting that. So, anyway, today this might ruffle a couple feathers because I think it's going to be really fun. I'm going to read off when I start sword trading on Reddit. I'm just going to read off the questions and answer them just with my own opinion. And I've been trying to get on here and help some people and leave some posts, and every time people say I'm spamming them. So I guess I haven't just figured it out yet, but there is a lot of white knighting going on Reddit. So I'd want to answer viewer questions, but since I don't have any yet, I figure I'd just read off of this and make some statements. So one of the first things I do want to say also is I had to move this just to get my computer set up before making this video. This is the Stock Trader's Almanac. I wouldn't call myself a trader. I wouldn't call anyone a trader if they don't own one of these. This is really cool. It's a lot of how I get kind of patterns, how I talk about and know over time what months are good, what months are bad, how things start when what they call the Santa Claus rally, for example. If the last 4 trading days of the previous year and the next 5 trading days have an average of up the new year, it's like something like 80-something% of the time the market finishes up. There's all kinds of different things like that. So anywho, the Stock Trader's Almanac, it is way overpriced. The dude that writes it is trying to sell his fund, but you know, that's kind of just going to be charged to the game. It's great information. You can ignore the stuff you don't like. So Stock Trader's Almanac is my Sherpa tip of the day. Let's get to reading some of these questions here. I think this one's really funny. So I type in the word trading, I hit search. I'm not on any subreddit, and I'm still figuring this out, so I might use the wrong language. But you know, one of the things that I think is really funny is that everybody's talking about the shorties. Hey, everybody short this, they're short that. Shorting this stock sucks. You know, let's all rally together again and kill the hedge funds. Look, man, I hate hedge funds too. For some reasons, I hate. I don't like. You know, hedge funds that are shorter than they are long. In up markets, I can't stand the predatory research companies like Hindenburg. They call themselves a research company. It's a well-funded group of 6 Ivy League guys. They're complete douchebag tools. They don't do any research. What they do is they file suits against companies based on interviews with ex-employees that they pay for. They bend the truth, and then they try to get that information out of stock research and then sell it to other folks. So or I'm sorry, they sell it to other folks, but then they also short the stock and then make tons of money and then get their entry point lower. So, look, I don't want to say, you know, don't hate the player, hate the game, but unfortunately that is the case. Something about hedge funds. People talk about hedge funds as though they're these completely kind of movie-like characters. Hedge funds are, let's talk about the evolution, I guess I'll say. So the hedge funds, all that really means is a company that is short and long a position, or a investment company that does like to go short and long a position. Hedge is a good thing. Don't forget that. Options trading, the reason you trade complicated, difficult investments is because you can allow yourself to hedge. Hedging sometimes is against the US dollar, sometimes it's against bad markets, sometimes it's inside of a pension fund. So you know, old factory worker Joe in the Bruce Springsteen song doesn't have to lose his job. This is not, these aren't as predatory as they sound. And I think a lot of these people on Reddit and less sophisticated traders just think that there's like a craps table in front of us and one guy's betting pass and one guy's betting don't pass. That's by no means the case. Don't be stupid. Here's the deal. The way it works is hedge funds essentially, my favorite strategy is to go 60 long, 40 short in an up market. There's always going to be companies dying on the vine. There's oftentimes things that we've seen coming for the longest time. Who wants to buy a VCR, for example? Would you have rather shorted companies that own VCRs and then went long Netflix? Probably. You could have made 3-4 times the money with half the risk. That's the point. That's the way it works. I know I'm being real simple about this, but the other big thing about this is that people keep talking about busting up and blowing up these hedge funds. I'm all about it. That's great. Let's get all the money back to the retail investor. But what you don't understand is that if you don't have someone selling what you're buying, then you can't buy it. And you particularly can't buy it at a decent price, because that's what determines what the bid ask is, and that's what makes the float. So, I trade a lot of options. There wouldn't be options for me to trade if there wasn't somebody selling the call that I'm buying. And if there was, which there always will be, but these big institutions that are taking these massive positions are providing liquidity to the market. This used to be the front page of my website. I don't believe markets are efficient when liquidity is not efficient. There will be times when there's more liquidity and less liquidity. What's better for the retail investor? More liquidity always. So, let's just cut the shit when it comes to this, kind of let's bust up the hedgies. Yeah, do it, make some cash, but also understand that, this isn't the Allied versus the Axis forces here, and that truly, a lot of hedge funds are the reason that there's less volatility in the market. So just own it, understand it, keep going for it. As far as Wall Street bets, I think this is a funny one. There's a guy on here that says something about how he just bought $1 million worth of GME with all the profits he made last year trading. That statement sounds pretty braggadocious and good for him, but that's not trading. That's speculative buying a stock with zero understanding or influence, which does win sometimes. And I think that's what's so beautiful about being an investor, being a stock picker, playing the markets. But that's not trading. And I do like AMC though. I'm not against that. AMC actually has some types of resources to come back to. GameStop, you're holding the bag. Get out of it. They're obviously funded so well now that they're trying to revolutionize or rechange or evolve into a different type of industry. But there's just so much easier shit to trade out there. There's so many other things to trade out there. You should be trading those instead. Let's see what else. Oh, Robinhood. This one's gonna be good. Robinhood has halted trading once again. So you mean the free app that you download for free and buy stocks for free doesn't have the best liquidity? It doesn't have the best ability for you to trade on, social media manipulated stocks? That's a shocker. Grow up, Robinhood, get a real trader or get a real brokerage account. The problem with Robinhood is that they sell their execution to Citadel. They don't go to the open market and buy it. They don't maintain their own inventory either. That's why I use Fidelity. They got 5 billion mutual funds. That's why they have all kinds of private client resources that allow shares to be feathered in when you're trading large amounts. They have capital markets, which their only job is to get you good execution and maintain these type of securities. Robinhood is nothing more than an aggregator of eyeballs so that they could sell you as the product to Citadel and other companies that, hey, guess what? They have to have liquidity. So that's the reason that they do that. Let me try to find something good on here. I've been a bit of a hater today. Let's see what else we got. Citadel and others have 200 million shares of AMC in the dark pool. This is related to OTC trading. That's over 4 times the amount of actual shares. Yeah, dude. Okay. You mean an investment company is trying to make money by using the rules in place that are completely illegal and provide liquidity for traders to trade shitty assets? Yeah, that makes sense. No big deal. Footprint of institutional trading, my written testimony. Let's see. All right, we're gonna switch up gears now. The market did just open. Let's see how my trades from last week are going. We got SOS is flat, Ride is up, that's good. QuantumScape is up, that's great. I recommended that one yesterday's. PBTC is up, CMC is up, huge. MT is up huge. Everything I recommended is up. LABU is up to 74. If you didn't buy it on Friday, I would go ahead and sell this thing when it hits 82, 83. That's what I'm going to put my limits at. LABU, that's an easy swing trade I mentioned before. That's going to crush it. Really no doubt on that. I've gotten the swing trading down pretty well. So I hope you followed me on that. There is still time if you haven't yet. There is a lot more volume and liquidity in the market today, which is a good thing. And I just wanted to do a random one. Comment, like, subscribe. Let me know if you like this video or don't like this video. A lot of the times, I'm just trying to get the word out there of what I genuinely believe and not what the investment industry is telling you. And we don't have to fight by the rules play by the rules that they play by because they're tilted in their favor. So anyway, Chase EverBullish, Chase at EverBullish on YouTube, the Stock Sherpa on YouTube. EVERBULLISH.com, and subscribe to my newsletter, learn some more insights, and become a better trader. So thanks a lot. I hope you all have a great day, and let's get rich.